Hello friends. Let's say you are in NRI based in UK or US and you have a Indian income also. Let's say you have a flat which has monthly rent coming in and have some shares getting dividends or the interest getting from the NRO accounts which you need to declare to the tax authorities in the where you are residing, for example UK. And even it makes more important if you have sold some assets in India, like properties or the shares. That's also an important consideration which you need to declare in the host country. An attempt is made so that you can kind of a plan or the estimate the tax which you owe, and also try to see like if you can get the relief from the present the where you're staying, like say UK. I'll give an quick demo. So let's say you have a rental income of 3 lakhs, capital gains. Let's say you have sold some land and you got a gain of, let's say, like 25 lakhs. Okay, this is a long term. So if you have held that asset more than 3 years, because it's just an estimator, not an exact. I'm using like a long-term capital gains. So I made the gain for of 25 lakhs for that particular plot. And the interest income, let's say we have an interest income of like say 35,000 from NRO. NRE is always tax free. Okay. So dividend income, let's say you have sold some shares, sorry, you have some dividends from the shares in your demat account. So let's say if it is around like 150,000. Now, now the UK income, because you are in UK, you might be getting some salary. So it will be, let's say you have nominal like 40,000 capital gain. So we can be having sold some shares here also in your UK demat account or whatever the trading account, what they call. So let's say we have again like say 10,000. So interest income, if you have invested in some savings account, non-ISA. So ISA interest is tax free, you don't have to declare it. Also in the capital gain, you don't have to declare the ISA gains, which are tax free. Again, interest income again like say 500, and dividend income for again from the UK shares, or if you have your own private limited company and all those things. So let's say we have like something like 25,000. Okay, let's see how it calculates. Okay, so there's a disclaimer because it's just an estimator. You still have to contact your qualified accountants to get the results done. Okay, so what it tells, like in India, you are in the tax bracket, whatever the capital gains it has calculated around, you need to have like 3,24,000 whatever, and the UK tax again, regular income tax, and you have a capital gains tax. And because UK and India has have a double tax avoidance the treaty, so that you don't have to pay tax whatever you have paid, so it will credit back, the UK will credit back that the tax. So around 857 pound it will be credited back. So final UK tax will be around 19,000. So overall you'll be paying around 22,000 pound in UK, in the sense in the pound, and in the IRN whatever according to the latest exchange rate. So what is normally uh, observed is, because the Indian tax filing closes bit early around July 31st if I recollect, so you have to can file that first. There are like now automated systems which can fetch the from your whatever the dividends and all the your records from the bank statements and get it done, something like I have listed here. And also then with that ITR field, you can go to the UK accounting firms which I have listed, and you can get it filed, so that you will be tax compliant on both the sides, and also you'll get the tax relief or the whatever the TDS back, all those things. Hope that helps. Thanks.